Brand new data from Redfin shows a significant spike in inventory and price cuts this spring, hinting at a potential surprise for the 2024 US real estate market. According to Redfin, the median sale price of a single-family home in the United States has reached an all-time high. Their latest report indicates that a typical buyer is now paying $433,558. This is a 75% increase from prices in 2017, highlighting the dramatic run housing has been on over the past 7 years. According to a lot of experts, because of these recent inventory developments, we could see these record high prices drop off a cliff in certain areas around the United States. Before I get into it, one thing you have to understand about housing costs is that it usually comes down to one thing: inventory. While many were quick to speculate on a coming crash in recent years, myself included, one clear variable that was missing was the supply. In theory, you simply cannot have a housing crash without an abundance of houses. If inventory is tight, as it has been over the past few years, nothing else really matters. You cannot achieve downward pressure on prices without a normalization of inventory levels. So what do these levels say today? Well, things are changing rapidly and it's making a lot of people worried. According to data gathered by Altos Research, today we have 556,000 homes available for purchase across the US. This is a 32% increase when compared to the same time last year, and when compared to the pandemic lows, it's right around 132%. Essentially, these lines represent the levels of supply year by year, and as you can tell, we've chipped away at the shortage and are now just 219,000 homes away from the pre-pandemic 2019 levels. For housing to experience any sort of substantial shift or crash, you would need these lines to be above the ones you see on top right here, and based on the pace of increase over the last few years, this is going to take quite a long time, years. But before you dismiss this video and call me a permabull who refuses to acknowledge the sheer absurdity of this market, there is an asterisk in all of this. There are areas where the supply levels differ heavily than what is shown in the chart here. These are cities where there is a massive difference between the national stats and what is happening on the ground there. One such city is Austin, Texas. The housing crash here started years ago. According to Zillow, home prices peaked in June 2022 and have been dropping since. From the peak to today, the typical single-family home price has fallen 17%, and the trend suggests it will continue to decline. This drop was driven by inventory. As we mentioned, inventory tells the tale. This graph of Austin's inventory data from Realtor.com shows that when inventory spiked to 8,000, reaching pre-pandemic levels, prices decreased. This is no coincidence and further proof that inventory tells the tale. When we see massive movements in the number of homes actively for sale, what tends to follow is the start of price declines. In fact, the situation in Austin is probably getting much worse. If you read Lance Lambert's newest article, you can see that in April 2024, which is the newest data we have, Austin's inventory spiked 30% year over year to 10,000 homes. This would make Austin's inventory at levels higher than what this chart even goes back to. So this proves that although the national stats still show a tight market, in some spots this couldn't be further from the truth. Even just browsing Zillow really quickly can give you a sense of the situation on the ground. For example, I was able to find this 3-bedroom, 2-bath home listed now for $299,000. Now, if you take a peek at the history, you will see that it's been up for sale since March 11th, and there have been multiple price cuts. One in April where the price went down by around $10,000, and another one on May 1st for about $30,000. Today, nearly 17 days later, following what is a 15% price slash, this house is still not moving. So the truth is, when you get a flash of inventory, that's really when you start to see just how bad things can get out there. Redfin CEO Glenn Kelman is well aware of this fact, and he recently went on CNBC to discuss this very problem. Take a listen to what he says regarding the shocking supply numbers. His words serve as a reminder that things can change overnight.
But let's talk about the actual dynamics of the housing market. Of course, supply has been the conversation, this real undersupply that we have, structurally speaking. We did see a little bit of an uptick if you look at the data recently, and I'm curious from where you're sitting, do you think that that's sustainable?
We'll see. So demand from home sellers to put their property on the market has been higher than we expected. So just for our own brokerage, we have a 33% increase in people asking to sell their home. Across the industry, you see a 15% increase in the number of listings hitting the market. For years, the market has been inventory constrained. So even as rates went up and buyers receded, we didn't have enough homes for sale. Now we're getting more homes on the market. It's not because there's been any easing in rates. It's really been a byproduct of people just wanting to move on. They were able to put off their plans in 2023, but I think it's hard to do that for a second year. So we're talking to more people who say, I just have to move. The problem now is that home buyer demand is relatively flat. Some of that is because home affordability is at a record low, and some of it is because there is so much anxiety about what's happening in the industry that people are still trying to process that.
Keep in mind that when we discuss these price changes and inventory levels, TV and internet pundits usually refer to national statistics. Nationally, we're still in a tight market, as I mentioned at the start of the video. Although national inventory levels are rising, it will take at least 2 more years to approach pre-2020 levels. Cities like Austin can differ from these national averages, but the situation can be even more complex. Specific areas within a city can perform better than others. In Austin, for example, a map from Realtor.com shows significant price variations between neighborhoods. Real estate is very local, and while citywide trends may indicate one thing, your experience on the ground can be very different due to variations between different areas of the city. For example, on the southeast side of Austin, you'll find some of the biggest price drops out there, and more specifically in the downtown area, the crash is at its worst. In the summer of 2022, a typical home in the downtown core cost about $1.2 million. Today, it's $858,000, meaning there was a 28% drop. In fact, prices in this downtown neighborhood are actually lower than what they were pre-pandemic. And of course, if we look at inventory levels here, you can see based on the Reventure app that this neighborhood saw an explosion in inventory in the post-2020 years, reinforcing the theory once again that inventory tells the tale. Throughout this article, you'll see that plenty of southeast neighborhoods in Austin have experienced price and value drops that far exceed the city's averages, as stated on the Metro graph. So what does this all mean? Well, it essentially tells you that what happened in Austin can really happen anywhere in the United States given the rapid expansion of values throughout US cities. But for the most part right now, this price action is only seen in a few cities that have had an inventory explosion. If you look back at the Altos graph, you'll see that for the vast majority of the United States, the market is still tight, which means prices are only likely to go up, not down. Until that changes, a nationwide crash is simply impossible. Of course, in specific metros, there will be deviations that we can observe to get a general understanding of what can happen, but until we see the same sort of changes across the board, the housing market will remain miserable for buyers. Thank you guys for watching. As always, please make sure you hit that like and subscribe button if you enjoyed it. And if you're a buyer that's looking in the southeast of Austin, let me know in the comments what you're seeing on the ground right now.